Welcome in, everybody. Ready to dive into some financials?
Always ready for a good deep dive. Let's do it.
All right, so today we're looking at Karur Vysya Bank, KVB, and we've got two sources to work with their investor presentation for Q3 of fiscal year 2025.
Okay.
And we've also got the transcript from their earnings call last quarter.
Right.
So kind of getting a full picture of what's going on with them. And what really caught my eye was how KVB is trying to, juggle all these different things.
Right.
They're trying to keep their assets in really good shape.
Yeah.
But they're also trying to, change up the kinds of loans they're making.
Oh, absolutely.
And then, of course, they've got interest rates changing all over the place.
Yeah, that's the wild card, isn't it? And I think that's the thing that jumps out to me right away. It's not just about growth with KVB. They're really focused on quality.
Yeah,
They're being very strategic about where they put their money.
they're being picky.
Yeah.
So let's start with the big picture, just kind of setting the stage. KVB's total business, it grew to INR 1,016,373 crores.
Okay. So that's a 13% increase year over year. It sounds like they're doing pretty well, but what do you make of those numbers?
So, yeah, 13% growth at the top line is certainly nothing to sniff at.
Yeah.
But what I find really interesting is what's underneath that. Their reserves and surpluses are up by a huge 19%.
Oh, wow.
And that tells me that they're building a strong foundation. They're thinking about the future.
Yeah.
And then you look at their deposits, which are also up 16%. And for a bank, deposits are the lifeblood, right? That's what allows them to make loans.
They're fuel.
Exactly. So they're not just growing, they're growing in a healthy way.
It's not just blowing up a bubble. It's like real strong growth.
Exactly. It's sustainable.
Yeah. Okay, so things get a bit more interesting when we start looking at how KVB is shifting its loan portfolio.
Okay.
So they've been pulling back on their corporate loans,
Interesting.
but at the same time, they're actually increasing their lending to individuals, farmers, and those small and medium-sized businesses.
Those strong tries. Yeah, exactly. So that seems like a pretty big change.
It is. It's a big shift in strategy.
Yeah.
And I think it's partly driven by trying to find more profitable opportunities, but also, with interest rates being so unpredictable these days,
Right.
they're trying to find that balance between risk and reward.
Yeah, it's like walking a tightrope, right?
Absolutely.
In the earnings call transcript, there's this quote from KVB's MD and CEO, Mr. B. Ramesh Babu.
Right.
And he says, it doesn't make much sense to raise the deposit at 7.6 rather than just bloating the book and top-line growth.
Okay.
And what he's basically saying is they're not just going to go chasing after those high-interest deposits if they don't think they can actually turn them into profit.
Right. He's saying we're not just going to take on more risk just for the sake of looking good on paper.
Yeah, they're not going to play that game. They're being more cautious, more deliberate.
Absolutely. It's a sign of discipline. They're being very selective about where they want to grow.
Okay, so speaking of being cautious, their asset quality really stands out. KVB has a super low gross non-performing asset ratio, GNPA of only 0.83%, their lowest in years.
That's fantastic.
Basically, it means very few of their loans are going bad.
Right. So that tells me they're really good at managing risk.
Okay, so it's not just luck. It's actually they're doing something right.
Yeah. They've got strong credit assessment processes in place, and they're probably very good at collecting on those loans.
Yeah.
Make sure people pay on time.
And it's not just the GNPA, their SMA 30-plus book, which basically means loans that are showing some early signs of trouble.
Right, those ones that are kind of teetering on the edge.
Yeah, exactly. It's tiny, less than 0.5% of their total loans.
Wow, so they're catching those potential problems early.
It seems like it.
That's a good sign. It means they're not just sitting back and waiting for things to go bad.
Yeah, they're being proactive. So overall, their loan portfolio looks really healthy, wouldn't you say?
Absolutely. I mean, all the signs point to a very well-managed loan book.
Okay, so let's shift gears a little bit and talk about something shiny gold.
All right, I like where this is going.
KVB's gold loan portfolio, it's been growing, and it now makes up a pretty big chunk of their total loans, 27%.
Okay, that's significant. So why are they making so many gold loans, do you think?
Well, gold loans are pretty interesting right now. The RBI, they've made some changes recently that have actually made these loans more popular,
Oh,
especially among people in agriculture. Seems like KVB is jumping on that trend.
makes sense. They're capitalizing on the opportunity, but are they being careful about it?
Yeah, well, Mr. Babu, in the earnings call, he specifically said that their approach to growing this part of their business is measured.
Oh,
He
yeah.
kept emphasizing, managing risk. They're dipping their toes in. They're not diving head first.
That's smart. The gold market can be volatile. So it sounds like they're finding that balance again, right?
Yeah, exactly.
Between taking advantage of the opportunity and not taking on too much risk.
Yeah.
It's like a balancing act.
Yeah, exactly. All right, so let's move on to something a bit more modern digital.
Okay. Digital transformation, right? That's the buzzword these days.
It is. Everyone's talking about it. KBB, they've really committed to going digital. Their D-Lite app, it's been downloaded a whopping 58.8 lakh times.
Wow.
And their digital transactions, they've just exploded, up 136% year over year.
Okay, so they're definitely not lagging behind.
They're ahead of the game. What do you think is driving those numbers?
Well, I think it's simple convenience. People want to be able to bank from anywhere, anytime.
Yeah, it's the world we live in now.
Exactly. Plus, it's more efficient for the bank, too. They can save money on branches and staff.
It's a win-win.
Absolutely. And it's not just about profits for KVB. They're also thinking about, doing good.
Okay, what do you mean?
Well, they're really focused on what we call ESG, environmental, social, and governance factors.
Yeah.
For example, they're working with WWF India on this project to help humans and elephants coexist peacefully.
Oh, wow. That's interesting.
And they're also involved in developing this village called Manavati that's all about sustainability and being resilient to climate change.
So they're thinking about the long term, the bigger picture.
Exactly. They're not just focused on the next quarter's profits. They're thinking about the impact they're having on the world.
So we've covered a lot. We talked about their growth, how they're changing their loans, their focus on asset quality, and now this digital push, and even their ESG initiatives. What do you think it all means? What's your takeaway?
I think the big takeaway here is balance. KVB is finding a balance between growing their business, managing risk, embracing new technology, and even considering their impact on the world.
Yeah, they're not just chasing profits at any cost.
Exactly. It's a more holistic approach.
So they're trying to do well by doing good, basically.
That's a great way to put it.
But we've only scratched the surface here, haven't we?
Oh, absolutely. There's still a lot more to unpack.
There's a lot more to dig into.
Yes, especially when we get into the specifics of their financials and the choices they're making for the future.
All right, so stay tuned, everybody. We'll be right back.
All right, so let's dive into those financials a little bit more.
Okay.
When we look at how their loan portfolio breaks down, it's clear that KVB's focus on retail agriculture and MSME, what they call their RAM verticals,
Okay.
it's really paying off. I mean, these segments have collectively grown by an impressive 20% year over year.
20%. Wow, that's a pretty significant shift away from, their more traditional reliance on corporate loans. What's driving that growth within retail?
Well, home loans and vehicle loans are definitely leading the charge there.
Okay, makes sense.
But it's also interesting to see, steady growth in personal loans and even those gold loans. So this kind of diversified approach within the retail lending space, I think it's a good sign that, they're not putting all their eggs in one basket.
Right, spreading the risk makes sense. But I'm curious about the flip side of that coin. What about their decision to, kind of scale back corporate lending? How is that impacting their bottom line?
Right.
Is it actually hurting them?
Well, their net interest margin, or NIM, came in at a healthy 4.11% for the quarter.
Okay.
And, for those who aren't familiar with that term, NIM, it basically represents the difference between the interest they earn on loans and the interest they pay out on deposits. So a higher NIM generally means they're making more money from their lending activities.
Okay.
So even with, less exposure to those corporate loans, they're still generating pretty decent returns.
So they are making money. They're not just growing. They're growing and being profitable.
Exactly. It's profitable growth, and that's the key, right?
Absolutely. All right, so let's go back to their gold loan strategy for a minute.
Okay.
We know a significant portion of their loan book is tied to gold, and they're lending at a loan-to-value ratio, or LTV, of around 66%.
Right.
Can you kind of break down why that LTV number is so important?
Sure. So that 66% LTV, it's a key indicator of how conservative they're being with those gold loans.
Okay.
It essentially means that for every, let's say, 100 rupees worth of gold, a customer pledges as collateral KVB is only lending out 66 rupees.
Okay.
So that creates a buffer, a margin of safety, in case gold prices drop.
Oh, that's a smart move, considering how much the price of gold can fluctuate.
Exactly. So if the value of that gold falls, they're less likely to end up losing money.
They're protected.
Exactly. They've got that cushion.
Okay. And if we look even closer at the types of gold loans they're making,
Yeah.
we see that agricultural gold loans make up the biggest chunk.
Right.
Which makes sense given those recent RBI regulations we talked about earlier, right?
Absolutely. The RBI has really made it easier for banks to lend against gold for agricultural purposes.
Mm-hmm.
And that's opened up a huge market for KVB.
Yeah, they're in a prime position to take advantage of that.
They are, but they're doing it cautiously. Their
Yeah.
non-agricultural gold loan book is growing much more slowly.
So they're being selective. They're not just handing out money to anyone who walks in the door.
Right. It's all about managing that risk.
It seems like risk management is like woven into the DNA of everything they do.
It really is one of the key takeaways here.
Mm.
KVB is prioritizing responsible growth, even when there's potential for making a quick buck.
Right. They're in it for the long haul.
Exactly.
Okay, so we've talked a lot about their strategy, their asset quality, but I want to circle back to this digital transformation for a minute.
Yeah, sure.
You know, we touched on their D-Lite app, which is obviously doing really well.
Mm-hmm.
But what other ways are they using technology to kind of, get ahead?
Well, technology is completely changing the way banks operate, and KVB is definitely not just keeping up.
Yeah.
They're actually leading the charge in some areas.
Yeah.
Beyond just the customer-facing stuff like the app, they're using technology to improve their risk management.
Okay, how so?
Well, think, robust systems for credit analysis, real-time monitoring of loan performance, early warning systems for potential defaults.
So they're using technology to make smarter decisions and, minimize risk at every step of the way.
Exactly. It's all about data these days.
Makes sense. That explains a lot about their, amazing asset quality.
Right.
But technology can also be really powerful for attracting new customers and keeping the ones they already have happy, right?
Absolutely. A smooth, user-friendly digital experience is essential these days. People want to manage their finances on their own terms, anytime, anywhere.
It's all about convenience.
Exactly. And personalization, too. You know, tailoring the experience to each individual customer.
So speaking of attracting customers, KVB is also really focused on strengthening what they call their liability franchise.
Right.
Can you explain what that means?
Sure. So think of it this way. To lend money, banks need a steady and reliable source of funds.
Okay.
That's their liability, the money they owe to their depositors.
Mm-hmm.
A strong liability franchise means they have a diversified mix of deposits coming in at a reasonable cost.
Okay.
So they're not too reliant on any one source.
Okay, so if we look at their current situation, their deposit breakdown, it reveals a pretty heavy reliance on retail term deposits.
Right.
Over 70% of their total deposit base.
Yeah.
Is that a problem? Could it become a problem?
It's definitely something to keep an eye on. While retail term deposits are a stable source of funding, they can become a bit of an Achilles heel if interest rates start to rise sharply.
Because people will just pull their money out and go somewhere else to get a better return.
Exactly, and that would put pressure on KVB's margins.
Right.
They might have to raise the interest rates on their loans to compensate, and that would make them less competitive.
So that's why they're so focused on attracting more of those low-cost deposits like current accounts and savings accounts, what we call CASA.
Exactly. CASA is the key to long-term stability.
And how does their digital push tie into all of this?
That's the interesting part. They're hoping their digital platform, especially the D-Lite app, will help them attract younger, tech-savvy customers. The ones who are more likely to use digital banking channels and hopefully maintain higher CISA balances.
So it's all connected, this digital transformation. It's not just about, bells and whistles. It's a strategic move to strengthen their financial position.
Exactly. It's a long-term play.
But, let's face it, they're not operating in a vacuum.
Right.
The banking industry is incredibly competitive these days. How are they stacking up against the big boys and all those fintech disruptors?
It's a tough market out there, no doubt. But KVB does have a few things going for them.
Like what?
Well, they have a strong regional presence, especially in southern India, where they've built really deep relationships with their customers over many years.
They've got that loyalty factor.
Exactly. And as we've seen, their track record on asset quality is top-notch.
Yeah, that has to count for something.
It definitely does. In a world where everybody's worried about risk, a strong track record like that is a huge asset.
And they're also appealing to this growing segment of investors and customers who really care about ESG factors, those environmental, social governance issues we talked about.
Absolutely. That commitment to sustainability, it gives them an edge.
So it's not just about playing defense. They're being proactive. They're exploring new opportunities for growth.
Right. Like expanding their gold loan portfolio and pushing further into the digital realm.
They're adapting and evolving.
Exactly.
Okay, but before we get into what the future holds for KVB, I want to touch on their investment portfolio for a second.
Sure.
What jumps out at you when you look at how they're managing their investments?
Well, the first thing I notice is that they're managing a pretty sizable investment book, but they seem to prefer playing it safe with those fixed income securities.
Right. Over 75% of their investments are classified as held to maturity or HTM.
Right.
What does that tell us?
So that HTM classification, it's a strong indicator of their conservative approach to managing their investments.
Oh.
It means they're planning to hold those investments until they mature, essentially locking in a fixed rate of return.
So they're not gambling on risky high return investments?
No, they're prioritizing capital preservation and stability.
Which makes sense with all the volatility in the markets right now.
Exactly. It's the time to be cautious.
Right. And speaking of stability, their overall capital adequacy ratio, or CRAR, stands at a healthy 16.27%.
Right.
For those of us who don't speak finance, what does that number tell us about their financial health?
So CRR is a key measure of a bank's ability to absorb potential losses and continue lending even if things go wrong.
Okay.
A higher CRR means they're better capitalized and more resilient to economic shocks.
Okay, so it's kind of like a financial cushion.
Exactly.
So 16.27% suggests they're in a good spot to weather any potential storms.
It definitely seems that way. They've got a strong capital base, they're managing their risks effectively, and they're making strategic moves to position themselves for future growth.
Right, but the banking sector, it's constantly changing. New challenges and opportunities pop up all the time.
That's true. It's a dynamic industry.
So let's shift gears a little bit and talk about the future. What are some of the key factors we should be watching to kind of gauge how KVB performs going forward? What are some potential roadblocks they might encounter?
Okay, so we've talked about all the good stuff, their impressive asset quality, their strategic shift in loans, and of course, their big push into digital banking.
Right, they've got a lot going for them.
They do, but like you said, the banking sector, it's like a wild animal, always changing.
Yeah, you got to stay on your toes.
So what are some of the challenges, the hurdles they're going to have to overcome to keep this momentum going?
Well, one of the big ones we touched on earlier is that need to diversify their funding sources.
Right.
Right now, they're really leaning on those retail term deposits.
Yeah.
And those can be a bit risky if, interest rates decide to go on a roller coaster ride, because people will just take their money and run, right?
Yeah.
Find a better return somewhere else.
Exactly. And that puts the squeeze on KVB's profits.
Yeah.
So attracting more to those low-cost deposits, the CSA, the current accounts and savings accounts,
Right.
that's going to be crucial for them to stay healthy in the long run. And this is where, that digital strategy we were talking about, it really comes into play.
So are you saying they're hoping to use technology to pull in those younger customers, the ones who are more comfortable with online banking and maybe less likely to be tied to those traditional term deposits?
That's the hope, but it's a crowded space, right?
Yeah.
There are a lot of banks and fintech companies all vying for those same customers. So they really need to make sure their app is top-notch, that it's easy to use, has all the features people want.
Gotcha.
And of course, they got to offer competitive rates. It's a tough market out there.
Yeah, no kidding. But it's not just about bringing in the new customers, right? What about keeping the ones they already have happy?
Absolutely. Those loyal customers, they're the backbone of the business. So making sure they feel valued, that they're getting good service, that's just as important as attracting new faces.
Okay, so we've got the challenge of funding sources, the competition in the digital space. Anything else keeping you up at night when it comes to KVB?
Well, let's not forget about the competition in general.
Right.
It's not just other banks they're going up against. It's those fintech startups, the disruptors.
The ones that are always trying to shake things up.
Exactly. They're nimble, they're innovative, they're not afraid to take risks.
Okay, so how does KVB compete with that?
Well, they do have a few things in their favor. Like we talked about, they've got a strong presence in southern India.
Right, they've been around a long time.
Exactly. They've built up a lot of trust with those customers.
And that asset quality, right? That's got to be a big selling point.
Absolutely. In this day and age, being able to manage risk effectively, that's a huge advantage.
And their commitment to ESG, that's got to help them attract certain investors and customers.
Right. It shows they're thinking about more than just the bottom line. They care about the impact they're having on the world.
Okay, so it sounds like they're not just, hunkering down and waiting for the storm to pass. They're actually trying to make the most of this changing landscape.
Right. They're embracing new technologies, exploring new markets. They're adapting.
So for our listeners who've been with us on this deep dive, what are the key things they should be watching for as KVB's story, continues to unfold?
Well, first off, I'd keep an eye on how they do with diversifying those funding sources.
Yeah.
Can they attract more of that low-cost COSPA build a more solid foundation.
And how successful will they be in attracting those, the tech-savvy customers? Can their digital platform really compete?
Right. Can they offer that smooth, personalized experience that people are looking for?
Okay, and lastly, I guess the big question is, can they keep up this incredible track record on asset quality as they, grow and expand into new areas?
Exactly. That's going to be the real test of their long-term success.
It sounds like KVB is really at a turning point. They've got some big challenges ahead of them, but they're also making some really smart moves.
It's going to be an interesting journey, that's for sure.
Well, that brings us to the end of our deep dive into the world of Karur Vysya Bank. Thanks for joining us, everyone.